Hello, everyone. My name is Anae Agostini. I'm CEO of CID Insurance Programs, and I want to welcome you today to our webinar, our workers' comp webinar called Successful Strategies for Quoting, Binding, and Managing Workers' Comp. Today, our instructor is going to be Darby Fisher. She's our work comp underwriter specialist, and so you will get a lot of good information today. And of course, Jacob Cole, our marketing coordinator, is running everything from behind the scenes to make it run smoothly for you. So let's start with logistics. You're going to be, of course, muted, but you will be able to hear. Your voice, though, is very important to us. So please pose as many questions as you'd like into the chat throughout the webinar, and we'll stop and answer them as we go. There'll be a short survey that will pop up after the webinar, and we really appreciate your feedback, so please take that survey. Okay, so what are we going to be learning about today? I'm going to start this off with the next two slides, and then Darby will take over from there. So our objectives today are you're basically going to learn how to manage your workers' comp policies. You really from the beginning to the end, because workers' comp is sort of its own beast, and it can have so many little caveats that cause a problem as you go through the policy cycle. And you also want to you're going to understand the obstacles that can arise once that workers' comp policy is bound, which I just mentioned. Discovering how to effectively obtain new business work comp quotes and how to hold on to renewals each year. It's an issue that we all face year after year. And then finally, how to better understand how to effectively compete in the workers' comp arena. That's always a challenge, and it's an ever-changing challenge. So let's dig in just a little bit deeper and talk about successful strategies for managing your work comp. This is sort of like a precursor for what Darby's going to be talking about today in the webinar. So you want to understand how to manage all facets of your workers' comp policy. It's the key to building a workers' comp book, because there are so many things that can go wrong that can cause a policy to cancel. So or not, and it doesn't renew. Sharpening your skills with quoting and closing binding processes is it requires an understanding of the underwriting of different size businesses. So that becomes a challenge, because it's not all one presentation fits all. So it's going to be having to really look at each different risk that you come across that you need a work comp quote for. And then presenting value-added insurance solutions. We'll provide the competitive premium, but you need to be able to share added insurance solutions, and that's the key. The combination of the two is the key to work comp production success. And that's for both new business and renewals. And then the last key to success here that she's going to be talking about is to efficiently manage policy activities from endorsements to audits throughout the policy period. Because I know it's a pain. No one likes this aspect of it, but understanding it better can make the process more simple and less stressful. And so she's going to talk about ways to help you learn that. So without further ado, I'm going to turn this over to Darby.
Good morning, everyone. So as Anaya mentioned, understanding the underwriting of different size businesses is going to create your competitive edge. And to sharpen your underwriting skills, there's 3 premium categories that impact the underwriting of different businesses. And those are your small, medium, and large size. I'm just going to go over briefly what each of those would look like. So small businesses are the premium range for around $2.5 thousand to $15,000. These risks are quicker to quote as they don't have as many exposures. The payroll and employee count is typically lower, and they typically aren't experience mod rated. Most of your book is going to be built on policies of this size. Medium-sized business, it falls within that 15 to 50,000 premium range. So this is going to be your sweet spot as they help to build the premium volume in your book. These generally incur lower loss ratios, so they are more stable than large businesses for the renewal side of things. However, they do require a deeper analysis in order to obtain a competitive quote. Large size businesses are those premium over 50,000. So these are going to add fast production volume to your book of business. These risks have greater exposures, more accidental exposure, higher rated class codes, so they are going to require a lot more underwriting. The premium range, though, that has the most competitive edge is going to be your medium-sized businesses, which we're going to discuss in our case study today. This is because they're staying under the radar of the big insurance retailers that want the business, and they generally have an assigned experience mod under 100 or just around that. That's resulting in a credit on the policy. So carriers are more likely to place additional credits on these types of these size businesses as well because of the reasons I just mentioned. So it's not just about submitting applications for a quote. Understanding how to properly underwrite different sizes of business and exposures will give you that competitive edge over another broker. So this is the workers' comp lifestyle and life cycle. And what I mean by life cycle is really looking at the work comp policy process from beginning to end. In the case study I'll be discussing, I won't only just be addressing how to analyze and quote the business, but how to efficiently manage policy activity from endorsements to audits and the renewal terms. So this is kind of the order in which things go. You're obtaining that new business to get a competitive quote. You consider all the binding requirements and bind that policy with the carrier. Once the policy is bound, there'll be policy period changes and exposures, which we'll go over. Then the renewal process will begin, and then it'll be finalized with the audit. So while I walk you through this case study, we're going to be learning about the policy's life cycle from quoting with the carrier to renewing the account the following year. So when quoting, you want to understand how to sell the risk to your carrier, what items are going to be of value to you when analyzing the risk, and how does this help give you a competitive advantage over other brokers wanting the same business. So these bulleted items give a general idea of the business structure. So with the contracting risk, the first thing I want to determine is if the business is an artisan or general contractor. That way I can get an idea of how many markets I'm able to quote the business with. Based off our insured's name, SoCal Carpentry, I know that carpentry falls within an artisan contractor, which we would have a market for. A few other types of artisan contractors, just real quick, are electricians, plumbers, framers, painters, landscapers, drywall, cabinet installation. And CID does specialize in artisan contractors, so our markets are expansive and competitive with these types of classes. So now that we've determined this is an artisan contractor, there's a few additional details I would want to know about the risk before I continue. So being able to anticipate the questions asked by the carrier when quoting is going to be the difference between you and another broker. So a few things I am also looking for on a contracting application are, is there a subcontractor exposure? So you should always have that listed on the applications because it's the number one thing carriers are going to ask when it comes to this type of exposure. Most of our carriers can quote up to 25% in subcontracting exposure. However, it would need to be lower than the W-2 payroll. So I always require an insured to complete a supplemental application as it helps you understand the structure of the business. So this business is a corporation, so all owners that have a stockholding percentage of the business do qualify to be excluded from the policy. And then next, I'm looking at physical locations, which in this case is one based in California. I want to know how many employees they have and their payroll figure to get an idea of the range of premium it's going to fall within. You'll notice there are a few class codes listed on the payroll section. There's two classifications for carpentry, and they're broken up based on the employee's hourly wage. This occurs often with contracting exposures, so make sure that it is listed on the application you receive. Another item to request is if you can obtain the insured's deck page and their payroll records to confirm that payroll is classified accurately. It will really help not only you, but the carrier you're quoting with. And then one of the most important items to review is the claims history and trade experience. How many years of experience does the owner and employees have? This can be a determining factor when asking for premium savings to be applied to the quote. Our case study has 8 years in business with 5 claims, 1 still open. Based on that information, their experience mod is assigned at 102%, which we're going to go in depth. So for a contracting exposure that's been in business for 8 years, 102% mod is manageable, but it is important to turn things around before the experience mod gets too high, because it will take a while. Once it continues to increase over 100, the longer it takes to get back under. So once you lose sight of it, it really can escalate. So as long as claims are still open, more costs can incur and will inevitably increase the mod. So getting that open claim closed quickly will help mitigate further debits on the policy. So one strategy when presenting the quote is to offer loss control carrier services. You can also obtain additional information from the insured, like is the injured employee still working for the business? Have they implemented any safety training or measurements since the claim occurred? What does their supervision look like within the business? What personal protective equipment is used? Some of these questions will be asked by the carrier and are helpful to obtain additional credits on the quote. I do see a question, are loss runs mandatory before quoting? So on the Accord application, there is a section for previous coverage, and you can state there who the insured has previously been with, and if there's loss runs, if there's been any claims that have been filed, you can list it there. However, when getting the physical quote from the carrier, we will need to submit physical loss runs, so it's always best practice to just request those from the insured when you're receiving the Accord 130 application as well. It just saves everyone time and will give you that quote a little bit more quickly.
A question for you, Darby.
Mm-hmm.
Do you, on those small premium policies, do you need loss runs to quote?
So on the smaller ones, I won't, dependent on the exposure. So even if it's a small contractor, I will need physical loss runs, but let's say it's a retail store or a small restaurant, those are okay to quote without physical loss runs as long as the Accord application indicates that no claims have been filed. I need some indication when I'm going to the carrier that there hasn't been any claims filed, because I can't go in not knowing at all. So those ones won't require the physical loss runs, but on the Accord application, it's best to give some insight into the coverage history. So back to our case study, the carrier coverage, they have been with 2 carriers in the past. So you should be inquiring if this is carrier or insured initiated. With contracting businesses, a frequent binding requirement with most carriers is for the insured to adhere to an inspection performed by the carrier. This is really important. The carrier will send an agent out to the business to ensure everything's up to industry standards and all employees are performing work safely. Now, inspections can be misconstrued as tedious or time-consuming that the insureds don't want to deal with. But in actuality, it's actually very helpful to the insured because it works as a way of being a preventative measure for claims to occur. And then if the insured doesn't comply with this, they are at risk by the carrier of their policy being canceled or non-renewed. So I recently bound a large contracting business that was subject to an inspection, and they didn't comply. It ended up being canceled. So for the underwriting information outside of the standard application and physical loss runs, all contracting risks are going to require a supplemental to be completed as it obtains the additional questions the carrier and the agent needs to know in order to fully understand the operations of the business. And when binding the policy, it's important to obtain all the binding requirements from the carrier, and they'll list those to you when you receive the quote from them. Exclusion forms are going to be mandatory. They may ask for additional years of loss runs if you've only provided, let's say, one or two. Maybe a no known loss letter would be required if there's been a lapse in coverage in the past. So it's all dependent based on the risk you're submitting. And then for the billing requirements, some carriers will require you to collect the down payment and submit it to them upon binding. Other times, an invoice is just going to be directly sent to the insured. So for this, we were able to submit the quote, and within 5 days, we could bind the policy. Now that the policy is bound, it's important to be in constant communication with the insured so you're aware of any payroll or location changes occurring midterm. If the insured has a payroll change and it's not endorsed onto the term, it will be accounted for at the final audit. And this payment cannot be spread out, whereas let's say you're doing a midterm payroll endorsement, it's going to be spread evenly amongst the remaining payment installments. And secondly, if a claim occurs and the location a location was not endorsed onto the policy, it wouldn't be covered by the insurance company. So if an insured hires a new employee that is performing duties outside of how they're written, you need to make sure to communicate that with the insured beforehand so you can get the proper classification and payroll added. Let's say our case study business decided to hire an employee performing roofing work. Our current markets would not be able to cover that class. So due to the material change, they would receive a non-renewal notice. So it's really important to be in constant communication with your insured because you can mitigate a lot of the issues that may come up when hiring employees or performing work that may be outside of the appetite of your carrier. So many contracting risks also require waivers of subrogation for jobs they may be performing. There's two types of waivers, blanket and specific. So a blanket waiver is prearranged wording that covers any person or organization. And then specific, you're providing us with the actual verbiage between the contract that's occurring in the business. Waivers are often requested for contracting. So there are certain carriers who have the option to request a waiver when you're quoting, which is really nice. As far as pricing, specific waivers typically around $250, and a blanket is a percentage of the premium. And then ownership changes are the next thing where I do see confusion a lot. When an ownership change occurs, either partial or majority, it's important for that information to be communicated to the carrier and the Work Comp Rating Bureau. Ownership changes aren't a simple process, so the change has to be submitted to multiple parties. So it's very helpful to be aware of that ownership change prior to it occurring, which is why it's so important to be in communication with your insured, checking in every other month. Sometimes our office isn't notified until 7 or 8 months later, which just poses a huge problem when it comes to an audit. When an entity or ownership change happens, an updated accord application, a 601 form, and depending on the entity, updated exclusion forms are required to be completed.
Darby, there's a question related to this slide.
Okay, so the question is, can you give an example of a waiver of subrogation? So the waiver acts as a contractual agreement that an insured may have with another party, which is agreed to waive the rights against one another in the event of a loss. So the blanket would be just a general statement that the carrier provides to list onto the policy. A specific waiver is going to be, let's say our contracting risk, SoCal Carpentry, has a contract with another business. We would provide that business's name and list it on the policy.
It's usually a contractual obligation, requirement?
Yes, it is. We're going to move now to the renewal process. So the next step in the policy life cycle is preparing for the upcoming renewal term. Renewals actually happen before the insured begins their final audit on the expiring term. So our office practice is beginning the renewal process 60 days out from the effective date. So we gather updated information such as payroll, officer exclusions, location changes, and we're going to be remarketing the account to outside carriers. At 30 days, we'll send a renewal proposal to our broker and then another reminder at around 10 days. When you're working your renewals, you should be considering all changes in exposures, so make sure to touch base with your insured. With our carpentry exposure, I would be checking in regarding any material changes, confirming that the subcontractor exposure is still underneath the carrier threshold. So the best way to do this is having the insured update or complete a new ACORD application prior to the renewal so you have the most accurate information. When working the renewal 60 days out, this will give you and the carrier the time needed to make the appropriate changes prior to the carrier releasing the renewal quote. So in the case you don't receive updated information, the carrier will issue the quote with payroll based on the previous term. And businesses are usually unaware that a payroll change can take around 3 to 7 days. So having that updated information from the beginning eases the process for you and for the carrier. It's important to inform your insured with any larger premium risk, so medium or large sized, that you will be remarketing the account in order to find them the most competitive quote. So due to the size and premium for our case study, I would be remarketing the insured approximately 45 days out to our other markets. And you want to pay attention to the insured's experience mod if they are rated. So our case study, it's 102%. I would want to be checking if that claim that was open is now closed to determine whether the experience mod is going to go up or down. And that way I can anticipate any changes in premium and let the insured know of that as well.
So there's one other question tied to the waiver of subrogation, which I could go ahead and answer.
Yeah, that would be
why
great.
Why someone want this? What circumstances? Well, anytime. So let's just say this contractor is going to do work for a company, and that company has a contract is going to ask them to be to have a waiver of subrogation put in place so that they can't be held liable or responsible for any type of work or injury. And that's usually why. Sometimes it's mutual. It's in the contract where they're mutually doing a waiver of subrogation with each other. But sometimes it's one-sided, and usually with contractors it's one-sided, and that the client they're doing business for does not want to have any exposure to those worker injuries, potential worker injuries. They want the contractor's workers' comp policy to be primary and only. So I think that should answer your question. Let me know if you have a further question.
Perfect. And lastly, from an underwriting perspective, audits are where I see the biggest problems. So it's important for you and your insured to know that all work comp policies are subject to a premium audit. There is no exceptions. Even if the policy is sold, or if the business is sold, even if it is canceled, it does not matter. They still have to comply. So when the policy renews, the previous term is not done at that point. An audit is going to determine if the payroll and exposures were accurate throughout the term, which is why midterm endorsements are so important to make throughout the policy. So there's two types of audits, voluntary and physical. Physical audit is when the insured will receive a letter requesting payroll records from their company, and once the requested documents are submitted to the carrier, a representative will contact the insured to visit their business and conduct a physical audit as well. Voluntary audits, you'll see these with smaller businesses or less exposure. Voluntary audits are where a form is typically sent to the insured. It's around 5 pages, and that lists the documentation and information required for the insured to just submit to the carrier. So you can expect most contracting risks to be assigned a physical audit due to their high exposure. The biggest confusion with audits tends to be an insured who's using subcontractors. So when submitting the audit documents to the carrier, the insured would also need to provide each of their subcontractors' certificates of insurance. The subcontractor's certificate of insurance should list that they have their own workers' comp coverage that falls in line with the insured's policy dates. For contracting risks, HOAs, property management, subcontractors are often utilized. For example, we recently had an insured try to dispute their audit as their subcontractor's payroll was included. And when I asked the insured to send me the certificates, I noticed two things: that the workers' comp portion was not included, meaning they didn't have their own coverage, and that the subcontractor's policy dates on the certificate were outside of the policy dates of the insured. So therefore, none of the subcontractor payroll could be excluded. So make sure to have your insured double check with all their subcontractors that they have their own work comp coverage with both requirements before hiring them in order to have their payroll excluded from the audit. If exclusion forms are not on file, per state law, officers will be included at officer minimum and maximum payroll. It does depend on the class code whether the officer will be included at that min or max, but entities that are eligible for exclusion must complete exclusion forms. That's typically a binding requirement, so I don't see this occur as much, but it's still something to be aware of. It's extremely important that these be completed and sent to the carrier on the inception date of the policy because carriers do not backdate exclusion forms. They take effect when received. And non-compliant and estimated audits, those are going to be released by the carrier after a period of time has passed and the insured has not complied with the audit request. So the carrier has been reaching out numerous times. They haven't heard anything back from the insured. So at this point, the carrier has to estimate the audit, and a non-compliance fee is applied to the insured's estimated annual premium based off the specific rate for their state. So I see these fees, depending on how large the premiums is, I've seen fees that are $40,000 because they have to estimate it. So getting that audit done before it's released as an estimate is really important. Audits are a really simple requirement once you get the hang of it. And once the insured complies, the carrier will remove the fee and release a revised audit. So you don't want to let this slip away or put it on the back burner because it really can be hard to get back on track at that point.
So, Darby, there's one other question that I'll take as well. Is there anything with the current state of the industry that we need to be aware of? And that's a really good question, whoever asked it. We've gone from COVID to inflation. We're probably going to move into a recession, and it's having this huge economic impact on businesses in general. And so it's for the most part, the workers' comp has stayed the most stable of all coverages. So we don't have a hard market with workers' comp right now. However, I have read some articles where we're starting to see some trends where it's impacting the, claim activity is starting to reach, into the workers' comp arena, and which is going to, slowly, I believe, start to see not a decrease in rates, but maybe a slight increase in rates going forward, and it's going to be because of claim activity for the most part. The other issue I'm seeing, or Darby is seeing, is that we're seeing businesses that are closing their doors. Maybe people that are retiring early. Or some people are selling their business. And so we're seeing a lot of disruption with business operations. And so that it can impact your book of workers' comp as well. We're seeing that everywhere, but workers' comp has not. We made it. they had frozen all of the payment of premium for the longest time during COVID for workers' comp, and then they brought it. Once went back to charging and not freezing anything. Now we're starting to see more disruption. So just hopefully that gives you a little bit of background. You can count on Darby to always be able to tell you what industries that we're doing well with, that are stable, and that you could build a long-term book with.
So our life cycle takeaways are going to be paying attention to all the moving parts that can reap havoc for your insured's workers' comp policy. This can be audit things, it could be billing, payroll endorsements. Communicate with your insured throughout the policy period. In doing so, you can mitigate a lot of the issues that may arise within your workers' comp policy. Treating workers' comp renewals like new business, you should still be getting updated applications, marketing with your carriers outside of the one that's currently with, presenting loss control services if the insured needs it. All of these will be good ways to implement a successful strategy for managing your book. And remember, the policy period is not over until the audit is completed.
Okay. I know we've got a question still pending, and I just wanted to say that's like a whole webinar in itself. So maybe I could take a moment and send you an email separately with some answers that could help you get more appointments with workers' comp business decision makers. But we're over our time, so I want to make sure that I thank you all for joining us today. But before you go, make sure you contact Darby because she's ready to provide workers' comp quotes for you today, and then on our website you will find work comp proposal templates that you can make your own, which are very professional and great to use, and you can customize it to yourself and take it. It's yours. And then also some marketing material for cross-selling workers' comp with your renewals. So a lot of times you only have the package and you don't have the workers' comp, so you're always at risk of losing it. So that would be a great marketing tool to send that out with all of your package renewals, right, to offer the workers' comp. So, and again, submit your applications to submissions@CIDinsuranceprograms.com, and we look forward to doing some business with you. All right. Have a great day.
Thank you.
Thanks for joining us.